Right now, at this exact moment, an app on your phone is tracking you. Not in the dramatic Hollywood sense of a spy satellite following your every move, but in a far more profitable way. It's collecting signals about what you tap, how fast you scroll, where you pause, which notifications you ignore, and which ones make you unlock your screen in less than 3 seconds. These tiny behavioral traces are quietly feeding a multi-billion-dollar engine that most people never notice, yet investors absolutely love. And here's the part almost nobody realizes. This tracking isn't just happening inside the apps you obsessively use. It's happening inside apps you downloaded once, opened twice, and forgot existed. Some of them run processes in the background, some sell data to brokers the moment it's captured, and some use SDKs, small blocks of code hidden inside the app that belong to companies you've never heard of. Those SDKs are the real business. They sit silently, collecting behavioral gold while the app maker earns pennies from ads. Behind the scenes, this tracking ecosystem has evolved into something far more advanced than simple location data. The real money isn't knowing where you are, it's predicting where you'll go next. It's identifying behavioral patterns so subtle that even you don't notice them. The times of day you're distractible, the days of the week you impulse shop, the hours when you're most susceptible to push notifications, and the moments when you're stressed enough to buy something you didn't plan to. This predictive power is why investors chase companies in this space. A small SDK that accurately forecasts user behavior can outperform entire ad networks. It's the difference between showing an ad and predicting a purchase. And with the rise of machine learning models trained on billions of data points, these predictions are getting shockingly precise. But the real turning point, the moment this industry went from a niche market to a gold rush, came when every major app realized the same uncomfortable truth. User data was more valuable than the app itself. A free weather app? Worth almost nothing. A weather app that knows your commute schedule, shopping habits, and sleep patterns? Suddenly worth millions. Not because of its features, but because of its data exhaust. And here's where the story gets even more interesting. Many of the companies collecting this data don't present themselves as tracking companies. They call themselves analytics providers, engagement platforms, performance optimization tools, or user experience enhancers. All technically true, but carefully phrased to avoid revealing the real business. Model. They give app developers convenient dashboards and free tools, and in exchange, they get permission to monitor millions of users, funneling data every minute of the day. But the twist is deeper. Some of these SDK companies don't just collect data, they buy it from other companies, combine it, clean it, enrich it, and sell it again in packages so precise they can capture an entire city's behavior patterns in near real time. This is the layer of the digital economy most users never see. Investors, however, see it very clearly. Because when you can predict how a population behaves, you can make bets big, profitable bets, long before the rest of the market realizes what's happening. Think of it this way. While you're scrolling through an app, deciding whether to click on something, the tracking layer underneath has already logged your hesitation, compared it to thousands of users like you, and adjusted your future recommendations. Meanwhile, an investor somewhere looks at aggregated signals from millions of people and notices something. A spike in interest for a certain product, a drop in engagement for a competing one, or the early signs of a shift in consumer behavior, all before earnings reports, before market analysts, before the public has any idea. This tracking system is the closest thing we have to legal time travel in business. And for the people who understand how to use it, it's a goldmine. So before we go deeper, do one thing for me. Type watching in the comments so I know you're here. Because what comes next is the part companies don't want you to think about the moment tracking went from passive data collection to active influence. the moment it stopped simply observing your behavior and started shaping it. And to understand how that happened, we need to go back to the first company that realized something huge. If you can predict a user's next action, you can also direct it. And that insight changed everything. Right now, at this exact moment, an app on your phone is tracking you. Not in the dramatic Hollywood sense of a spy satellite following your every move, but in a far more profitable way. It's collecting signals about what you tap, how fast you scroll, where you pause, which notifications you ignore, and which ones make you unlock your screen to understand how this invisible machine actually works. You have to picture something far simpler than most people imagine. It's not a giant control room with blinking lights or a secret government server farm. It's a network of tiny fragments of code, just a few lines each, embedded inside millions of everyday apps. Fitness apps, flashlight apps, shopping apps, games, productivity tools, even the apps you downloaded because a friend recommended them once. Each piece alone is harmless, but together they form one of the most powerful data collection infrastructures ever built. And here's the strange part. Most app developers don't even think about the tracking layer. They add SDKs because they need analytics, crash reports, or monetization tools. They don't read the full permissions. They don't analyze the outbound data packets. They're trying to build features, fix bugs, keep users happy. Meanwhile, the SDK is quietly mapping behavioral patterns, your routines, your preferences, your subtle habits that reveal far more than any survey could. Investors call this behavioral liquidity, and it's the real reason these companies are so valuable. Data isn't just collected, it's liquid, meaning it moves, it merges, it flows across platforms, and it reveals opportunities. Imagine a company noticing that users who start a certain fitness program also tend to upgrade their headphones within 3 weeks. Or that people who download a specific budgeting app often begin searching for moving services shortly after. These aren't random coincidences, they're behavioral indicators. And investors treat them like early signals of market movement. What makes this system even more powerful is how fast it operates. When you tap on a product inside an app, that signal can be aggregated with millions of others in seconds. An entire industry knows what people are gravitating toward, what they're losing interest in, what trends are about to explode, and which ones are dying. By the time trends hit social media, the tracking layer has already mapped the entire life cycle. And yes, it's legal because you clicked "I agree." Most people don't read privacy policies because they're pages of dense legal text designed to be unreadable. But inside those paragraphs are the permissions that fuel this business. Permissions to collect data, share it, enrich it, and sell it. Not your name, not your identity, your behavior. And in today's digital economy, your behavior is far more valuable than your name. The craziest part is how prediction models use this data. It's not enough to know that you bought coffee at 8:17 a.m. What matters is that you've bought coffee at roughly the same time for 19 of the last 23 days, that you stay longer when it's raining, that you spend more on Mondays, and that you tend to order food delivery on the nights you skip coffee entirely. These micro patterns create behavioral fingerprints, unique and incredibly powerful. And once companies figured out how to combine these fingerprints, the game changed completely. Suddenly, they could forecast market demand, spot emerging customer segments, and identify the exact moments when a user is most likely to buy, subscribe, upgrade, churn, or return. That level of insight doesn't just make marketing better, it makes entire investment strategies possible. This is why hedge funds pay enormous sums for aggregated data streams. They don't want to know about you specifically. They want to know what millions of people like you are doing in real time. They want to know if foot traffic is rising outside a retail chain before earnings season. They want to know if interest in electric bikes is peaking in one state but declining in another. They want the signals before the announcements. And because the tracking layer sees everything, app usage spikes, searches, micro gestures, daily rhythms, it becomes a forecasting tool more accurate than traditional analytics. Investors describe it as seeing the market from above, watching behavior shift before the financial world catches on. But there's a darker side that almost no one talks about. When prediction becomes precise enough, it starts to influence behavior. If an algorithm knows you tend to buy snacks when you're tired, guess when you'll see snack ads. If it knows you hesitate before making big purchases, guess when you'll get a limited time offer. And if it senses you're drifting away from an app, it can ping you at the exact moment you're most likely to return. This is where tracking crosses the line from observation into manipulation. It's not controlling your choices, but it's nudging them, guiding them, steering them just enough to benefit the companies and investors who understand how the system works. And now we get to the real question. How did a handful of companies become gatekeepers to this entire behavioral marketplace? How did they gain access to data powerful enough to move billions of dollars? To answer that, we need to look at the company that mastered the art of invisible data collection and turned it into a vertical empire. An empire built on the simple idea that behavior, when monitored at scale, is the most valuable commodity in modern business. What happened next wasn't an accident. It was a strategy carefully engineered, tested, refined, and deployed at a scale the public never truly understood. Because once these companies realized they could collect behavior, and once investors realized they could profit from it, a new race began. The race to build the God layer of mobile data. The layer that sits above everything, inside everything, connected to everything. The layer that sees not just what you do, but why you do it. And the winner of that race wasn't the company with the best app. It was the company with the most integrations. The one that could embed its SDK into the largest number of apps without users ever noticing. The one that could convince developers that its tools were essential, while quietly transforming those same tools into pipelines for behavioral intelligence. This model spread like wildfire. A simple analytics kit here, a free monetization tool there, a performance booster somewhere else. Each one offered value to developers. Each one extracted far more value from users. But the most profound shift came when these companies moved from passively collecting behavior to actively shaping the digital environment around it. The more data they gathered, the more their models learned. The more the models learned, the more they could customize what users saw. And the more customized the experience, the easier it became to guide behavior toward profitable outcomes. It wasn't mind control. It was architecture, digital architecture designed to maximize certain actions. And that's when the tracking layer evolved into something far more powerful, a real-time feedback loop between user behavior and investor strategy. When millions of people show early interest in a product, investors get the signal. Money flows, companies react, marketing ramps up, more people buy, and the loop accelerates. By the time the general public hears about the trend, the investors who understood the signals are already on the exit ramp, taking profits. This loop doesn't work with guesswork, it doesn't work with surveys. It works because the tracking layer has become the closest thing to a real-time sensor for human intention. Not what people say they want, but what their actions reveal they're about to want. And as long as apps remain the center of modern life, that sensor never turns off. But here's the part almost no one wants to acknowledge. The line between prediction and influence is blurring faster than anyone expected. When algorithms know that a user tends to shop online when stressed, they can shape the digital space in ways that amplify those tendencies. When they sense someone is feeling lonely or bored, they know exactly which notifications can trigger engagement. Behavioral economics becomes a tool, not a theory. And the people with access to the data can use it to drive outcomes naturally, almost invisibly. This is why some investors call this industry the quiet engine of the modern economy. It doesn't scream for attention. It doesn't advertise itself. It exists in the background, analyzing everything, guiding everything, powering decisions across entire sectors. It affects retail, entertainment, finance, mobility, healthcare, real estate, any industry where human behavior determines revenue, which is all of them. And yet, the average person has no idea. They think tracking is about ads, they think it's about relevant content or better user experience. They don't realize it's about something much bigger. The ability to see human behavior with such clarity that the future becomes less of a mystery and more of a calculated forecast. For investors, this clarity is priceless. For companies, it's a competitive advantage. For users, it's invisible, and that's what makes it so powerful. But here's the twist. The system only works because people don't question it, because they assume their data is worthless, because they believe the price of convenience is simply tapping allow and moving on. They never think about the fact that every swipe, every pause, every tap is a signal. And those signals, when combined with billions of others, form patterns strong enough to move markets. So the next time a free app asks for permissions it shouldn't need, pay attention. The next time a notification arrives at the strangely perfect moment, think twice. And the next time you see a sudden surge of interest in a product, a trend, or a company, remember this. Somewhere behind the scenes, the tracking layer saw it first. And the investors who had access to those signals, they were already making their move. Now, I want to know what you think. Does this ecosystem make the digital economy smarter or just more manipulative? And if you had access to these real-time signals, would you use them? Drop your answer in the comments. And if you want a breakdown of the companies leading this hidden industry, tell me, and we'll make that the next episode.